some of you might still have some Bitcoin or Ethereum. I mean, I do. I've stopped looking at how much they're worth now. And God help you if you still have Dogecoin. But as we all look back at the last few years, the question is, was this whole crypto craze just a huge scam, or was it misunderstood? And why are countries trying to launch their own digital currencies? CJBS finance faculty Dang Nguyen teaches a course here about digital currencies, and he's here to tell us a bit more about what that's all about. Hi, Bang.
Hi, Conrad.
So, Bang, could we start by thinking about what is the problem with money? I mean, it seems to be okay. I whip on my credit card, I pay, everything seems fine. The only problem that we all have with money is we all want more of it. So, what were the problems that crypto was trying to solve?
Yeah, so I thank you for the question. It is actually, I think, the most fundamental questions that one can have on the existence and the emergence of cryptocurrencies. So allow me just to show you maybe one slide. Let me. So basically, what I would like to say that when you make a transaction, okay, when you are using your credit card to pay for something, or when your employer make a transfer from salary to the account, there are so many things that we basically cannot see, and these kind of things are becoming actually quite important. But the most important thing in all financial transaction is actually the notion of trust. So when you are using your credit card to pay for something, you are relying on actually the credit card company, and they have a full view on what you are doing. And sometimes, if they are not happy with what you are doing, they can go back and change your transaction. So if you are paying something, 3 days after, you can get a message from them saying that your transaction cannot be accepted, and they deny you. So the first thing is that we need kind of trust on a third party like a credit card company or a bank or a central bank. If you are holding on dollar, you want to believe that the Federal Reserve of the US is doing a good job. So without that kind of trust, basically our whole financial system collapse. And the truth is that not every time that our trust has been well-based. Let me tell you a few examples. So here is, like a list of what humankind has been going through as, like payment system. Okay, so we can always trade gift. And in the past, humankind has been rely on barter. So basically the exchange of goods as mean of payment, and so on and so forth. Now, currently, we are basically relying on a fiat currency, bank currency, and now cryptocurrencies to make a financial transaction. Now, the difference between all the previous system of payment and cryptocurrency is that all the previous system rely on trust. Without trust, no financial system would work and would continue to exist. And now the issue with that, sometimes we have been betrayed by that kind of trust. So, for example, let's talk about fiat currency. Everybody is using fiat currency now as a payment instrument, right? Whether we would like to buy a coffee or whether we would like to go to supermarket and pay for small items. Obviously, it's practical. And obviously, if we have the trust in the central bank, then we can keep, a bit of fiat currency in our pocket for our needs. But then in many countries, you see that the currency value can change overnight. Why? Because the central bank is the only organization who have the monopoly in terms of money printing. And so they can debase, they can make the value of the currency higher or lower, kind of at will. And also, not to mention that in many countries, counterfeiting is a problem, and the transport and the safeguard of fiat currency are also very costly. Now, a fiat currency could not function if people don't have trust in the central bank. In many countries, when the inflation is high, people are gonna switch from using fiat currency to other form of currency and payment. So trust is the central concept and issue in our financial system. The other thing that maybe Conrad have not seen is that for any operation, any transaction that he's doing, it costs him at least 2% of the value of the transaction. He might not see that, but actually, in research we have, like some papers that look at 100 years of financial transaction in the world and not less in the US, and basically technology have changed a lot since like 200 years, but there is a constant thing that have not changed, which is the cost of financial transaction, which is like 2%. That is kind of not changed in ages. And then if you might think that you can rely on bank, to make transaction, if you understand how the banking system works, they could have some bad news to you users. Most of the time, we have short memory, so we don't, as a like user, it's not our job to have long memory. But remember that the banking system is actually creating money. And here in this picture, out of $100 of deposit at the beginning here, you have two other layers of bank who borrow money from the first bank and then who lend money to other bank. And from $100 of deposit at the beginning, just after two layers, the amount of loans is increasing to $171. What does it mean? It simply means that our banking system is actually printing money, creating money. Okay, they can do that as long as we can have trust on them. Okay, but I don't have to tell you that every 10 years or so we're gonna have a mini or a big banking crisis. If at any moment all the people would like to draw money at the same time, then what happened gonna be what it is called a bank run. So the banking system gonna be collapsed, and it has happened many times over in history. So in the US, if you look at the 70s and the 90s, there are hundreds of bank failures. And I don't have to tell you that the latest bank failure happened in the US just a few months ago, and it is still ongoing. So now, going back to the very question that Conrad is asking, the common denominator of all the payment system and our current financial system is that we have to rely on what it is called a trusted third party, be it a bank, be it the central bank, be it a credit card company, for the financial transaction to work. And this kind of trusted third party is subject to a long list of potential problems. And the few examples that I just cited to you, they are just examples. You have more. So, for example, corruption is a problem. For the fees is a problem, and the fact that all the so-called trusted third party can reverse transaction, all that kind of problem are gonna make us consumers not happy. And this is exactly the starting point for cryptocurrency to appear. And so basically, cryptocurrency is there to try to fix all the current problem that we are suffering from. Okay, I don't know whether I can show you one slide. So I have some problem here because it not show you the original slide that I would like to show you, or maybe it take a little bit of time to be uploaded. So let me show you another slide. Okay, so in August 2008, there is a minor event that nobody noticed, which is that the domain Bitcoin domain was registered. Okay, and Just like a few months after, there is what it is called a white paper, okay, that was released on the internet on the 31st of October 2008. And the very person, we actually, I could not call it a person because we does not know whether it is a person, a woman, a man, or whether it is a group of people. But there is, I will still call it a person because there is no other word for that. There is a person called Nakamoto who has been behind all that kind of thing. And basically, Nakamoto declared that he would like to invent a new system, new payment system that basically fix all the trust problem and all the deficiencies problem related to other form of payment, be it central bank currencies or a credit card or whatever. And this system is not based on trust at all. It's based on technology, and there is no notion of a trusted party controlling all our transactions. And let me just finish by maybe another slide that tell you about the major technology
Yeah,
behind.
Bang, is this the one you're looking at?
Yes, that one. Yep. Can you see it?
Yeah, yeah.
Okay. So basically, before cryptocurrency, whatever we do as financial transaction is based on some sort of trusted party. And on the left hand side of the screen, you are actually seeing that traditional kind of financial transaction. So in the center here, you have a clearinghouse. I call it clearinghouse, but it can be whatever. So for example, if tomorrow Conrad would like to buy a few shares on the London Stock Exchange, he's gonna have to work with a broker. The broker gonna ask Conrad to pay, but then the share purchase that Conrad is ordering tomorrow will only be executed and confirmed, let's say in the following 2 days. And who is doing that? The guy in the middle, the clearinghouse. And if, for example, Conrad violate whatever the code of transaction, then the clearinghouse can say this transaction is not valid and reverse. So Conrad could not execute this transaction, and then the clearinghouse gonna double check all the transaction. Okay, the clearinghouse is a third party. Now, in Nakamoto world, there is no longer any room for clearinghouse. Each financial agent are gonna deal directly with each other, and the verification rule that a normal clearinghouse is doing is now the common job of everybody. The ledger, the book of transaction in any kind of cryptocurrency scheme is public domain. Everybody can have a look at it. And the verification of transaction is not assumed by clearinghouse, but by a process which is called the proof of work, that the collective of all the user contribute on in terms of verification. So all the transaction gonna be verified, but not by a trusted third party, but by the very community that we are in. So on the left hand side, the clearinghouse system, if you ever had any kind of accounting course at university, we know that this system is based on double entry bookkeeping. And this system has been invented since the Renaissance, and it's still working nowadays. On the right-hand side, basically, Bitcoin and other cryptocurrency is telling you, okay, we no longer need the double entry system. We're gonna switch the system into what it is called distributed ledger. So the book of transaction is public domain, and the job of verifying all the transaction belong to the community. There is no central authority at all, and everything is 100% transparent, and every transaction is done in real time. and without any intervention of any outside party or like third party. So so basically, what I would like to conclude here, the cryptocurrency, and most of the time I use the example of Bitcoin, but it is pretty similar to all the other currency. They are a new system of payment that help people to make transactions, but in a completely different way. The aim of cryptocurrency is to make all the transaction transparent, to reduce the cost of all transaction to the minimum possible, and also to make sure that each and all of the transaction is verified by the whole community. That what any kind of cryptocurrency is aiming at. And if they can successfully do so, the current system that we are living in, all the current financial transaction that we are doing every day, gonna be completely changed.
Thanks so much for that really great introduction, Bang. We have a couple of comments. So one of our alums, Bao, who worked in fintech in China, talks about BRC20, which is I think it's a derivative of Bitcoin. So Bao, I guess you must be an enthusiast about BRC20. We had a comment from Gary about central bank digital currencies, which we'll take later. But here's a question from Judy, who's a alum of CJBS. She says, with a high likelihood of a serious economic downturn, trust in traditional safe havens like gold, commodities, US dollar has been on the rise and is still rising. If against this fallout of cryptos, what do you think will happen? Do you see crypto rising in acceptance, or will it go underground?
Right. So thank you for the question. On the BRC20, I think it is just like a technical, really a technical thing that I don't think that we have enough time to discuss here. So basically, the thing is that Ethereum and other newer cryptocurrency is suggesting a lot of improved technology to basically try to address the shortcomings of the first and the most important cryptocurrency, which is Bitcoin. So I would prefer not to discuss that kind of improved technology, because it's gonna simply take a lot of time. Now, going back to the current question by Judy, we will actually have a look at how crypto currencies have been doing during this time, and how could we compare the performance in terms of investment of cryptocurrency with the like of gold, commodities, and other asset classes. We're gonna do it later on. But what I can tell you is the following. One, cryptocurrency is based on technology. And the first ever cryptocurrency, which is Bitcoin was just like created in 2009. So it is something like very young. And if you think of the birth of internet in the early 2000s, there are a lot of similarities. They're gonna be some, it's gonna take, I guess, cryptocurrency a bit of time to find their feet, to be accepted by people. And the trend is, if you look at today, many people are very skeptical when we are discussing about the winter of crypto, right? Crypto winter. But obviously, as an investment, we're gonna discuss it later. Cryptocurrency have been very volatile. That is for sure, and I will show you some data on that. But if you look at on the other side, the return has been also as fantastic. So my view on cryptocurrency is that we should not only be benchmarked, again, a short period of time. You should look at first, the technological base of cryptocurrencies such as Bitcoin. Second, we should look at, cryptocurrency in a little bit a longer window. And third, and obviously, we should also look at the performance of cryptocurrency, not as a standalone asset, but maybe in a portfolio. I hope that I can have a few minutes, discussing that later.
Thanks, Bang. And you mentioned double entry bookkeeping from the Renaissance. Uh, Gary says, doesn't Bitcoin use triple entry bookkeeping?
I'm not sure of what Gary means, but if he means that each transaction on Bitcoin is actually checked and verified a lot of times, and it takes a lot of effort to kind of verify each transaction, then in this sense, yes. And the process of verification, transaction verification and approval is so serious, so complicated that the mining process, that is taking a lot of energy, consuming a lot of electricity. So yes, but I have to be clear here. There is no triple entry. If you would like to use triple entry bookkeeping in the sense that each transaction is indeed verify and check and approve, and it takes a lot of energy to do so, then yes. But there is no bookkeeping here. There is just a very straightforward kind of verification process, which is completely transparent, and everybody can see that. Then it's completely different to any traditional double entry bookkeeping that we know.
And Bang, you mentioned about the volatility. Does this kind of show a bit about that huge spike in interest in crypto, and then there's huge swings later on?
Yes. Okay. Let me. I will also show show how crypto has been performing since day one. But let me show you here as a flavor of it a few facts on crypto. Let me just go back to and I will obviously tell you about here. So if you look at this picture from the period between 2010 and 2013, if we look at Euro, Japan yen, Switzerland franc, British pound, and gold, all of those currency or commodities obviously have volatility, but none of them would be comparable to cryptocurrency, and here Bitcoin. So the daily average volatility of Bitcoin between 2010 and 2013 is 9%, not per year, but per day. And it tells you simply about one thing, which is that if you want to have Bitcoin as a standalone asset, as a store of value, you need to be extremely careful, because this is an asset that is extremely volatile. It is perhaps the most volatile asset that we are currently having, with a significant value in the market. And maybe I have another slide to here. Okay, so let me show you a few maybe shortcoming then of sorry. Let me just jump in a few other slides. Right, so let's have a look at some potential issue with Bitcoin and also with other cryptocurrency. So how would digital currency in general and Bitcoin perform as a form of money? Okay, so one of the purpose of digital currency is basically to replace other form of currency in transaction. So how actually cryptocurrency have performed then? So the first bottleneck of Bitcoin and of many other cryptocurrency is actually transaction speed. Okay, they are different. But if you know about Bitcoin, one of the most serious bottleneck for them is that all the transaction can only be verified and approved in blocks of 10 minutes on average. Okay, and why 10 minutes then? This kind of 10-minute average, it has been actually programmed in the software of Bitcoin to as a compromise between two conflicting problems in the blockchain. Okay, so the blockchain of Bitcoin want to make sure that all the transactions can be verified quickly, but then on the opposite side, the blockchain of Bitcoin also want to condense large amount of transaction in one block in order to avoid putting too much pressure on the network. So this kind of 10 minutes of transaction time is really like one of the most serious problem for Bitcoin, for example. And because of that, I will show you next. It put a big kind of problem on handicap transaction on the blockchain of Bitcoin. And the big bottleneck number two of Bitcoin is the fact that Bitcoin system and network can basically only process 4 transactions per second as an output. Okay, if you want to compare it to Visa, for example, Visa system can process something like 47,000 transactions per second. So you compare 4 transactions per second and 47,000 transactions per second. Now, why that number? That number is derived from the fact that Nakamoto, in his design of Bitcoin, would like to limit the memory size of each block on the blockchain of Bitcoin to be initially at only 1 megabyte. Okay, and the community of users of Bitcoin has an absolute right to change that, to increase that kind of memory limit. But as you know, Bitcoin has no centralized authority. So the community of Bitcoin users have to reach a consensus, and only with consensus they can increase the size of each block on the blockchain of Bitcoin. And for now, only one attempt has been successful. So Nakamoto would like to set the limit in terms of memory of each block to be 1,000 megabyte. Now it is increased to 1.2 megabyte. So it is a little bit improved, but it is not much improved. And because of the limit of how much memory the software can tolerate for one block for Bitcoin, the speed of the volume of transaction is now 4 or 5 per second, and that is a big potential issue for Bitcoin. In theory, the users of Bitcoin can decide to increase the memory size of each block to whatever the level they want, and if they agree on that, the volume of transaction per second can be significantly improved. But there is a lot of conflict of interest among the users on whether to increase or not the size of the memory. Maybe everybody here understands the advantage, right? If we increase the limit in terms of memory per block, then the volume of transaction per second can be increased significantly. But that is maybe not the interest of a lot of miners who are big and who might earn actually a bit more fees by putting more pressure on the users to pay. So they might not have the same interest like any other users on Bitcoin. And the governance rules on Bitcoin is that you have no centralized authority. So everything that people would like to do on the blockchain of Bitcoin must be through like consensus. And consensus is that is very difficult to reach because of the conflict of interest of a lot of miners. Now, any currency must basically qualify for 3 classical criteria to be a good money, okay, good currency. So it must be an unitary account, practical unitary account. It must be a store of value, and it must be a medium of exchange. Now, if you would like to know whether Bitcoin or other cryptocurrency can be a good currency, we have to look at that kind of classical qualifications. And let's have a look at that. Unitary account, the question we would like to ask is, do consumers compare relative prices in Bitcoin? The answer is definitely not. Until now, very few retailers denominate anything that they are selling or trading in terms of their price in terms of Bitcoin, even when they accept it. Okay, they don't really denominate their prices in Bitcoin, and the value of Bitcoin is such that for any kind of ordinary goods, the large number of zeros in the price is discouraging. Now imagine if you would like to buy the Starbucks coffee, and if you would like to pay it by Bitcoin, and let's suppose that today the price of Bitcoin $30,000, and let's say that the price of a coffee is just $5. So with one Bitcoin you can buy 6,000 coffees. The number of zero that you have to put in the price is annoying. Okay, so it's not practical. And worse, if you ever have time to kind of visit a lot of web portal that sell and buy Bitcoin, or sell and buy goods that are denominated in Bitcoin, I can guarantee you that you're going to find a lot of violation of what it is called the law of one price. I mean, if the market is efficient, everybody knows that the same asset must have the same price everywhere. But if you look at the denomination in terms of price in Bitcoin, even in the US, even in big cities, then the same good have different prices in Bitcoin, which is like not good for Bitcoin as a currency. Now, medium of exchange, is Bitcoin a popular medium of exchange? Not really. The number of merchants or traders who accept Bitcoin is relatively very, very low in comparison to other currency, whatever the currency you can think of. Okay, the reason is very understandable. If you think of the first bottleneck of Bitcoin, which is 10 minutes in average in terms of transaction approval. If you buy a coffee, you cannot wait for 10 minutes, right? It's too long for you. And also it is not that popular in terms of among the merchants. So it's difficult to kind of find merchant who accept Bitcoin. And last but not least, in the world of crypto, there's a big problem in cryptocurrency in general. The absolute majority of the users are actually male. Okay, male users of cryptocurrency are anything between 95 to 100%. So basically, we do have a lot of biases in the world of cryptocurrency, and I already showed you that one. The third qualification for a good currency, which is that the currency must be a good store of value. And if you look at the volatility of Bitcoin, you say no, that should never be a good store value. So that for those kind of reason, users and people tend to be really focused on just one function of Bitcoin and cryptocurrency, which are kind of they see them as an investment, okay, as a speculation, and they tend to forget about the origins of cryptocurrency, but what they are supposed to do in reality.
Thanks so much, Bang. I think there's a couple of questions about government digital currencies. So maybe this is a time for us to take a look at that topic. But just to quickly, Gary again talks about how he thinks that central bank digital currencies will reduce the cost of transactions and transform how money is created. And
Yep.
Someone on LinkedIn like me, lost a minute on Bitcoin and Ethereum. Do you think that when governments take over, try to establish their own cryptocurrencies, and that will devalue the more established ones.
Okay. Now, to Gary's question first, I will go back to his point. In theory, yes, central bank digital currency could potentially reduce the cost of transaction. In reality, not. I will show you a few reasons. But let's start from that point. Immediately, all the central bank in the world are at least, to put it like at the minimum level, very, very worried of the emergence of cryptocurrencies. And by now, I'm pretty sure that you understand the very fear of any kind of central banker in the world now. If ever the world, according to Nakamoto, can be true, then nobody would need any kind of central bank, because then everybody can transact directly to each other. There would be no central kind of organization, and there would be basically the fees, transaction fee, going to be so low. Everything going to be direct, everything going to be transparent, and we don't even need trust. We're going to be living in a world where I don't need trust in Conrad, and I can still do business with him. I don't need the central bank to be the middleman to guarantee the trust between us. So that exactly the motivation for all central bank to seriously think of what they have to do vis-a-vis cryptocurrencies. And I can guarantee you that almost all the central bank of the world have thought of that, and have thought of somehow take part in that kind of I would call it competition, to kind of show the world that they're very kind of rational to exist. Because otherwise, if everything gonna be working perfectly in Nakamoto kind of world, central bank will be disappearing. And that exactly the reason that central bank in the world try very hard to kind of emulate the technology, the technological basis of cryptocurrencies, and try to make use of it to compete against other cryptocurrencies. But in one word, even nowadays, I have not seen any successful attempt by central bank to issue electronic or digital currency. Let me tell you about the example of China. Okay, China surprisingly has been one of the first country in the world to think of having their own central bank cryptocurrency. Okay, and even now they are doing a lot of promotion and a lot of experiment in some provinces in China to promote the central bank currency. But I think everybody had to accept that it is still far from a success. And the very reason is the following. In China, already nowadays, you have a few technologies, a few digital currencies that are actually better in terms of the cost, better in terms of the technology, and even more practical because of the number of users who accepted them. If ever you have used Alipay or whatever the main kind of digital currency in China, you're gonna know that they are very practical, very simple to do. You can basically do everything, buy everything, sell everything with that kind of digital currency. So maybe because of all that kind of reason, even in China, so far, their project is very ambitious. They set up a task force that includes some of the bright minds from China, but still it is far from a success. So let me figure out maybe one slide that I would like to use to show you that that point. Otherwise, we can go back to the other question that let me see that here. So the Bank for International Settlements. So basically, it is the bank of the central bank. They have done a survey on consumers, right, toward central bank digital currencies, and you see that at the beginning, like in 2018, 19, the absolute majority of users in the world have very, very negative view on central bank digital currencies, and the main reason was that they don't want to give consumers and users don't want to give central bank even more power. I mean, they already issue, the fiat currency, and they have the monopoly to fix interest rate and to print money. And now, if they can also issue, digital currencies, and basically, central bank gonna have too much power, and the perception of users toward central bank digital currency was very, very negative and bad. But as you see here, more and more it seems that more people like change a little bit of their view, and more people have been not positive but less negative on central bank digital currencies, right? So in a nutshell, the very reason that central bank would like to have their own currency in many countries has been that they were so worried that basically other cryptocurrencies such as Bitcoin or Ethereum one day might take over their role. So to fend off that kind of existential kind of threat, they would like also to kind of launch their own digital currencies. But so far, their attempt have not been that successful. If you compare it to whatever the current payment system or the current cryptocurrencies, I think that it's still at a very infant kind of stage, a central bank digital currency.
Yeah, and I think in the previous podcast we had Helen Thompson from the University of Cambridge talking about the dominance of the US dollar, and that's one of the reasons, one of the big drivers of American power, and that's why the US authorities don't want anyone else trying to erode their power through things like crypto. But we have only a couple more minutes. Wanted to ask a few questions from the audience. A couple of people talked about how it's so volatile, people have lost money. And Ahmed asked, how do we ensure lay people are not taken advantage of?
Okay. I guess that, Ahmed's question is all about the cryptocurrency as an investment, right? So let me jump to that very quickly, just to tell you a few facts about cryptocurrency investment. Let me jump to that slide. Okay, so I think that I cannot jump, so let me just move slide by slide. I'm sorry for that. Right, so cryptocurrency as an investment and how volatile it is, and what should we do in terms of investment, right? Because I know that so many people earn a lot of money by investing in cryptocurrencies, but I think that the number of people who lost a lot of money it has been also a lot. So let me just show you that picture. Okay, I have not updated that picture till now, but here is the sorry. This picture show you the return of cryptocurrency since their beginning. So basically, in 2010, with $1, you can buy something like 50 bitcoins in 2010. Nobody really took it seriously. But then I just stopped it at, in 2020, by the end of 2021, before another jump in the value of Bitcoin. So by the end of 2021, the price of Bitcoin was $10,000 a piece, right? And then if you look after that, it has been increasing up to some point in 2022 to $70,000 a coin. And nowadays, it is something like anything between 28,000 a coin to 30,000 a coin. Now, in terms of cumulative annual growth rate, if you have been investing in Bitcoin for the long term, you ought to earn 247% per year, every year, since the beginning of Bitcoin. Now, to give you just like it's complicated, the number is so big. If you have ever invested in Bitcoin at any point in time since 2010 to 2021, your investment has been double, almost in value, almost every 6 months. Okay, so I think that in that period, none of other assets could have beaten Bitcoin in terms of return, right? So if you only look at return, then it is fantastic investment. I could hardly think of which investment could have been better. Now, more interestingly, if we extend our view until recently, okay, so in 2010, we know that, for example, in March and April, between March and April 2020, the whole world has been under lockdown because of COVID, right? And all the price of all the main classes of asset like Bitcoin, Ethereum, S&P 500, gold, and bond has been crashed between March and April. So if you look at Bitcoin, for example, okay, Bitcoin has been losing something like 50% almost of value between March and April 2020. But the issue here is even more interesting. Bitcoin was losing value in the same time that other asset was losing value. That actually a very interesting thing that any investor would like to have, because normally, if you ever do investment, you never invest in only one asset, right? You should invest in a portfolio. And most of the time, before that kind of crash, people think that Bitcoin has been one of the rare assets that might be used as a hedge when the worst thing come, okay? But the thing that we learned from that period between March and April 2020 is that the bad news is that Bitcoin has been actually positively correlated to other assets. So it is not a good refuge when you are in difficulties. And had COVID never happened, we might never learn about that kind of things. So the very thing that we learn from here is that even if you put Bitcoin in a portfolio, that might be not enough to protect you from downturn, okay? Because Bitcoin turned out to be positively correlated with other assets in the world. Okay, now let me just go back to one of the earlier questions. Some of some people just ask the question that, okay, whether the value of Bitcoin going to be increasing if the government kind of intervene or do something. The very bad news for you is that by definition, all government of the world can do nothing about cryptocurrencies. By construction, cryptocurrency is decentralized. Nobody can close any kind of cryptocurrency. The only thing that government can do is maybe try to put some kind of regulation on cryptocurrencies. The thing that all of the central bank and government in the world try not to do now, because I think that they are very prudent, because I think even the government and the central bank are not 100% sure that they understand maybe the bright side of cryptocurrencies. So in terms of regulation, it is like wait and see kind of mode that central bank and government are having now in terms of cryptocurrency. Now, here is a perfect example of how wrong even a top banker can be when they look at Bitcoin. So if you look at 2027, Jamie Dimon, the CEO of JP Morgan, he just make a statement that Bitcoin is a fraud. It's just not a real thing. Eventually, it will be closed. It was done at Tulip Bomb, and it will not end well. Somebody is going to get killed. Let me have a comment on that. 100% of what Jamie Dimon said in his statement is wrong. Bitcoin is not a fraud. Okay, we need to be serious because Bitcoin is actually based on a very big progress in terms of technology. If you look at the very cryptography technology behind Bitcoin, it is actually an established technology. And there has been a lot of innovation behind Bitcoin and cryptocurrency. So Bitcoin is not a fraud. Uh, Eventually, it will be closed. Bad news, nobody can close Bitcoin. The best thing government can do is just to try to put a little bit of regulation in Bitcoin. But that even this will be very difficult because Bitcoin has no frontier. Bitcoin has no central authority. You cannot order people to shut down computer, right? That is impossible. So nobody, even the US, no government in the world can, or no dictator, even in China, can just simply order, any kind of cryptocurrency to be closed. It's impossible. Okay. Uh,
Okay.
and it was done tulip bulb. There's no evidence that Bitcoin in terms of a speculative asset is worth than tulip bulb. If you look at the return, contrary, the return has been very good for investor. If you look at the long term, okay, if you just invest in Bitcoin overnight, then nobody can guarantee return at all, right? But if you look at the long term, so far, Bitcoin has been one of the best investment that investor could have. And last, it will not end well. Somebody is going to get killed. I have not heard of anybody get killed by Bitcoin yet, and maybe I don't know about everything. But so Bitcoin is actually contrary to many wrong perception. I'm not defending Bitcoin or any cryptocurrency. We need simply to be objective. But everything that the people like Jamie Dimon mentioned is not true. Let me show you maybe one or two last slide on that. Now,
Bang, actually, we got one other question, actually,
yep.
which I think is quite interesting. Mona asks, can cryptocurrencies get hacked?
Okay, that is actually a very, very important question. So far, there have been really little evidence and so few cases that cryptocurrency themselves could be hacked because the technology behind the like of Bitcoin is almost bulletproof. We do not know any kind of successful cases in terms of like attack on Bitcoin, for example. Ethereum suffered one major attack, okay, but only one since their creation. Now, people get confused. The system itself could be hardly hacked, but the users, when they use platform to trade, or when they have to manage their own wallet, then this kind of thing can be hacked. And it happens on a daily basis. But the core technology, the system, the blockchain of Bitcoin, they have been there for, I don't know, since 2009. There has been no successful attempt to disrupt the system. So the system itself is based on proven technology. Okay. If I have time, I can tell you the reason why it is almost impossible to hack Bitcoin so far, except that in the future, humankind gonna have some jump in terms of the like of quantum computing. That then in that sense, maybe some kind of future computer can have such a power that they can unlock some blockchain. But the technology behind Bitcoin is very practicable in the sense that if computer can increase their power, then the system can increase their level of difficulties quicker and at a lower cost. So that is the basis, the philosophy of the system. So Bitcoin is very safe. Ethereum is very safe. But when you use wallet or when you rely on platform to trade, and if you don't know about the basic kind of rules of web safety, you can be subject to hack and attack. So for example, if you go to the internet and somehow you visit a website and somehow the website can actually send some kind of malware to the computer, so your computer control can be seized by hackers. and then they're gonna use all the password, all the ID to log in the system and steal all the Bitcoin or Ether that you have. But the system in itself is very safe.
Yeah, and I think Gary replied on LinkedIn as well that he thinks they're very much hacker resistant, and that's why he's working in crypto asset custody security. Wow,
Yes.
Bang, thank you so much. It's been wonderful. I know we could talk a lot more about this, but we're running out of time very soon. But thank you so much for helping us understand what's happening with crypto, taking away all that noise, and understanding why it's going to be here to stay, but it may or may not be what a lot of people are saying. So thank you so much for that, and thank you to our listeners for your
Thank you very
questions.
much.
I'm so sorry we couldn't get through all of them. The balance sheet itself will be off the air until July. I'm working on a 24-hour online learning event for our CJBS alumni that takes place at the end of the month. So I'm doing that for the next few weeks. And if you are an alum of CJBS, please look at your email and register for the event. We'll be back in July with sessions on leadership and product launches. So till then, stay safe and we'll see you then.
Thank you.